A retail apocalypse is the closing of a lot of physical stores, especially those owned by large international chains. It started around 2010 and was made even worse by the COVID-19 pandemic's mandatory closures. In 2017, more than 12,000 actual stores shut because of elements including overdevelopment of shopping centers, rising rents, liquidations, utilized buyouts, low quarterly benefits outside occasion glut spending, deferred impacts of the incomparable recession, and changes in ways of managing money. Due to a variety of factors, including experience spending versus material goods and homes, casual fashion in relaxed dress codes, and the rise of e-commerce, primarily in response to competition from juggernaut companies like Walmart and Amazon.com, American consumers have altered their purchasing patterns. According to a 2017 Business Insider report, Amazon.com was responsible for more than half of the rise in retail sales, earning the term Amazon effect. Retail apocalypse is a misleading term that instills insecurity in the 16 million retail workers in the United States, according to dissenting economists and experts, who asserted that the recent retail closures are a market correction. Want to know about it in detail? Well, stay tuned till the end. Hello everyone. Welcome back to the channel. In this video, we will talk about many retailers are collapsing as store shutdowns continue to rise. Meanwhile, subscribe to this channel and press the bell icon. That being done, let's start. More chains that are expanding their number of stores than closing stores indicates that the so-called retail apocalypse narrative was exaggerated, according to research published in 2019 by global retail analyst IAL Group. That year, retailers in the United States announced 9,302 store closures, the highest number since data tracking began in 2012, a 59% increase from 2018. Due to the financial impact of the COVID-19 pandemic in 2020, corporate bankruptcies and store closures increased significantly, with most retail stores, particularly mall-based retailers, already struggling, closing for extended periods of time. During the pandemic, J. Crew, Neiman Marcus, Stage Stores, JCPenney, and Tuesday Morning were among the retailers to declare bankruptcy. Discount superstores, Walmart, Target, low-cost fast fashion brands, Zara, Uniqlo, Cotton On, H&M, off-price department stores, Ross, Marshalls, Burlington, pet stores, PetSmart, Petco, and dollar stores, Dollar General, Dollar Tree, and Family Dollar, are the most successful retailers in North America during the current retail apocalypse. The fundamental component referred to in the end of retail locations in the retail end times is the change in buyer propensities towards web-based shopping. From 2015 to 2016, e-commerce holiday sales increased by between 11% and 20%, according to estimates. In the same year, physical department stores saw a 4.8% decline, while brick-and-mortar stores saw an overall increase of just 1.6%. Mall oversupply is another factor, as the number of malls in North America increased at a rate more than twice that of the population between 1970 and 2015. According to a 2004 essay by Malcolm Gladwell, the introduction of accelerated depreciation into the tax code in 1954 by the United States Congress artificially accelerated investment in malls. Despite the construction of new malls, mall visits decreased by 50% between 2010 and 2013, with further declines reported in each subsequent year. A significant, revealed contributing variable to the alleged retail decline is an ongoing eatery renaissance, a change in purchaser ways of managing money for their discretionary cash flow from material buys, for example, clothing, towards feasting out and travel. The death of the American middle class, declining real wages and rising costs creating a middle-class squeeze, is another factor that has been cited. This has led to the widespread closing of retailers like Sears and Macy's, which have traditionally relied on spending from this market segment. Variety stores like Dollar General, Dollar Tree, and Family Dollar, which were once thought to be unaffected by the apocalypse because they continue to grow rapidly, are now seen as, at best, a symptom of the phenomenon and, at worst, a direct cause of the collapse of rural independent retailers who are unable to compete with the lower margins that national chains can sustain. This is especially true in rural areas. Poor retail management combined with an excessive focus on quarterly dividends is the final factor in poor brick-and-mortar sales performance. In order to optimize short-term balance sheets and understaff retail stores in order to maintain high claimed profits, inaccurate inventory control results in both underperforming and out-of-stock merchandise, resulting in a poor customer shopping experience. In addition, the profitable operation of retail chains is hindered by the excessive debt of numerous long-standing chain retailers, which typically results from leveraged buyouts from private equity firms. Due to non-pharmaceutical interventions issued in an effort to mitigate the pandemic, many retailers were forced to close their doors as a result of the COVID-19 pandemic. During the lockdown caused by the coronavirus, online shopping has been growing at the same time. The majority of major e-commerce retailers in the United States were not required to close because they were considered essential businesses. Purchasers expressed that they would purposely purchase items from such classifications as food and beverages, cleanliness, family cleaning, dress, well-being, and buyer hardware online as opposed to face-to-face because of coronavirus. It is claimed that the outbreak permanently altered consumer shopping habits. 29% of consumers surveyed in the United States stated that they would never shop offline again. This number reached 43% in the UK. Corusite, a retail research company, estimated in June 2020 that the number of store closures caused by the pandemic and subsequent recession would surpass the 2019 record of 9,302. Store openings increased by 36% over the previous year, while store closures decreased by 49% between 2020 and 2021, according to Corusite research data. Attire and frill represented 43% of retail terminations in 2021. The analytics company reported in July 2022 that store openings had exceeded store closings for the first half of the year, with 10% fewer closings and 3% fewer openings than in 2021. Customers' experiences and a brand's reputation have been identified as two factors that can influence a retailer's survival. Toys R Us and other well-established retailers may not have been as responsive to shifting consumer behavior trends. Using technology, IKEA became one of the first retailers to use Apple's R-Kit to develop an augmented reality app that allowed customers to visualize 3D renderings of IKEA products as they would appear in a specific room or place. Some researchers have made recommendations to improve the outlook for traditional brick-and-mortar retailers based on trends and technologies. It was reported that Macy's, American Eagle, Nike, and Sephora were implementing a variety of technologies to integrate digital experiences in order to enhance the physical shopping experiences of customers. Customers can now try on makeup at Sephora thanks to the installation of smart mirrors that make use of augmented reality technology. While Kohl's streamlined its retail presence by reducing the size of some stores from 90,000 square feet to between 60,000 and 35,000 square feet, Walmart automated some aspects of its supply chain, beginning the utilization of robots to help spotless and stock racks. While employees have stated that they dislike working with robots, executives at the company have claimed that robots reduce costs and increase efficiency. According to a 2018 study from the International Council of Shopping Centers, new stores can drive up share of web traffic within that market by 27% and increase traffic to retailer websites by an average of 37%. Lowe's has been using Lowe'sBot to assist customers in finding items. Forbes outlined several factors that aid retail survival prior to the COVID-19 pandemic's onset, placing brand reputation at the top of the list. Delivering a great in-store retail experience, customer-targeted stock offerings, and seamless omnichannel integration were highlighted by Monash University in Australia in February 2020 as the three key factors for a healthy survival during an apparent retail apocalypse. According to the most recent data, retail sales increased by 0.6% in October. However, this came after a decrease in sales the month before, when shops were closed for the Queen's funeral. The Office for National Statistics, ONS, reported that sales are still below levels prior to the pandemic, despite October's rebound. The rise in October could be a false dawn, according to analysts, and the crucial Christmas trading period could be difficult. In October, the UK's inflation rate, which measures how quickly prices rise, reached 11.1%, the highest level in 41 years. The government has stated that the country is in an economic recession, following a decrease of 1.5% in September. The most recent ONS data indicated that sales volumes increased by 0.6% in October. The ONS Director of Economic Statistics, Darren Morgan, stated that the increase in sales in October was primarily attributable to the effect that the extra bank holiday for the state funeral had on sales in September. He continued, looking at the broader picture, retail sales continue their downward trend that has been seen since summer 2021 and are below where they were prior to the pandemic. According to the ONS, sales volumes decreased by 2.4% between August and October compared to the previous 3 months. So what are your thoughts on this? Let us know in the comments below. And that's all for the day, guys. If you found this video interesting, make sure to hit the like button. Also, subscribe to the channel and press the bell icon to never miss an update from us. Thank you for watching. We'll see you at the next one. Until then, peace.